Hello everyone. So today we are going to start with a new chapter, that is our company's accounts. Okay. In that we have six different units. So we are today starting with the first unit in the company's account. So first of all, what is company? See, I won't be going in depth into the concept of company, what are the different types of company, how a company works, because the same will be dealt in the business law. In your foundation syllabus itself, in the business law there's a separate chapter on companies act, right? So in that chapter all the details regarding the companies will be completely dealt with. Clear? So I will touch only the concepts which are required for the purpose of accounts. Let's start. So let's dive into some basics first of all. So what is a company? So company is an association of individuals formed for a common business purpose and recognized as a separate legal entity by the law. So let's break it down. So let's start with the story. So let's say Mr. A and Mr. B. There are two people who want to start a business of, let's say, what business can we take? Of buying and selling of goods. It can be any goods or services. Okay, buying and selling. Let's take some IT industry. Okay, I want to start an IT industry where I just code and develop apps and websites for the people, whoever wants to get them done. So I open something called as a company. So over here what happens is, these two people don't know anything about a company. Okay, these two people don't know anything about a company, these people don't know anything about the IT industry also, but they want to start a business and they know that IT industry might have a potential in the future days. So what they will do, they will come together, club the money whatever they have, and invest the money in something called as a company form of business. Now to run this business they appoint two people. They appoint Mr. C and Mr. D. Got it? So these both people, Mr. C and Mr. D, both these people know how IT industry works, what is to be done so as to grow the business, right? But these two people have money but don't have the knowledge. These people don't have the money but they have the knowledge to run a business. So what happens over here is, these two people will come together, club their money and put it in the or invest it in the form called as a company. Now, to run this business, since these two people don't have any knowledge about the IT industry, what they do is they appoint Mr. C and Mr. D as a people who will be running the business. So now, there are some terminologies that we use over here. So Mr. A and Mr. B will be called as something called as what? Shareholders. These people are called as shareholders. Why do we call them shareholders? Because these are the people who hold a share, a proportion of the total ownership of the company. Out of the total ownership of the company, these people hold some small fragments of the shares of the company, right? So they will be issued with something called as equity shares. They will be issued with something called as equity shares of the company. There are some different kinds of shares. There is equity, there is preference, that we will deal in the further slides. So first of all, let's see what is equity shares. Equity shares is something which is issued to the owners of the company. So that means, in short, all the shareholders becomes the owners of the company. There can be n number of shareholders for a public company and for a private company. For private company, there's a limit of 200, whereas for a public company, there can be unlimited number of shareholders. Clear? Okay. So these people will pool their money, invest it in a form of business called as company, right? It can be a private company, it can be a public company, depends on the case to case basis. So now these people appoint two people, right? Mr. C and Mr. D. So these two people are called as what? These two people are called as directors of the company. These two people are called as directors of the company, who will be running the business on behalf of whom? On behalf of shareholders. All the business decisions will be taken by these two people, right? With the approval of the shareholders, right? So this is how a business runs. So it need not be that only the owners has to come and run the business. Since these two people don't have any knowledge of the IT industry, what they do, they have appointed these two people who will be running the company on behalf of whom? Mr. A and Mr. B. Okay, so these both Mr. C and Mr. D will be called as what? Directors of the company. These people won't be called as the owners of the company. These will be called as the management or the board of directors. Clear? Okay. Now, can the shareholders be a director? Yes, a shareholder can be a director. There is no compulsion saying that a shareholders and directors should be different people. So now in my case, let us say Mr. A and Mr. B, both of them have knowledge also. They have money, they have knowledge to run the business. In that case, what Mr. A and B can do is, they can be a shareholder, they can also be a director of the company in the same sense. Clear? Okay. So now going ahead. So look at the definition once again. So it is the association of individuals where Mr. A and B are coming together and formed a common business purpose, for a common business purpose, to run a separate entity or a company and recognized as a separate legal entity. So what do you mean by separate legal entity? So as we have studied in the basics of the accounting, all the business and the owners are separate from each other, right? So in this case, there is a separate legal entity for a company. That means owners are different, whereas company is different. So you cannot club them both together. Whatever transactions are undertaken by the owners are different than the company transactions. So you cannot club them in a single account. Clear? Okay. Then what are some salient features of a company? See, before starting this chapter, I recommend you to just have a look at the company's account in the law and then come over here, because all the things will be cleared out so easily for you people, right? Because in this chapter we will only majorly deal with the shares and the debentures part. All the legal aspects of the Companies Act will be dealt in the Companies Act. Clear? So what are some salient features of a company? So first of all, we have separate legal entity. That means owner is different, whereas the company is different. So both will be treated as separate people in the eyes of law. Then perpetual existence. So what does perpetual existence mean? That means if tomorrow both these directors die, both these shareholders die, still the company keeps on running. That there is no pause for a company until the company goes into dissolution, right? We have to apply for the courts, or we call it as NCLT, National Company Law Tribunal. So after applying for that, we can go for the dissolution of the company. There's voluntary dissolution also. It is a complete separate procedure which is not required right now. So it has a perpetual existence. That means the company goes on and on. Whoever may come, whoever may go. That doesn't matter. All the shares whatever Mr. A and B have can be transferred to some other people, maybe to his children, maybe to his relatives, whoever it can be. So these shares will be just transferred. So if Mr. A and Mr. B dies, that doesn't matter. But the company goes on and on. Clear? Then the company has limited liability. Limited liability up to what extent? Limited liability up to the extent of the shares subscribed by them. Now what do I mean by this? See, let's say the company wants a capital of rupees 20 lakhs. Clear? Now this was subscribed by Mr. A and Mr. B. Let's say 80% was subscribed by Mr. A and the remaining 20% was subscribed by Mr. B. So that means 4 lakh rupees is being subscribed by whom? Mr. B, whereas remaining amount of 16 lakh is subscribed by Mr. A. Now what happens is these capital, see, now currently this is in rupees terms, right? This is the amount. This amount will be divided into small chunks of shares. How? I can say that one share of the company is equals to rupees 10, is equals to rupees 10 or rupees 100 for that sake. Okay, clear? So each share certificate or each share or each portion of the company's capital is divided into rupees 100. That means one is worth 100 rupees. So that means how many shares does Mr. A have? In simple terms, I can say shares will be equals to 16 lakh divided by rupees 100. Simple. Rupees 16 lakh divided by 100. That would be how much? Rupees 16,000 shares. 16,000 shares in case of Mr. A, and in case of Mr. B it is how much? 4 lakh divided by rupees 4 lakh divided by rupees 100. That will be how much? 4,000 shares. So that means how many shares does company has issued? How many shares has the company issued? Company has issued 16,000 plus 4,000 shares. Plus 4,000 shares. That would be 20,000 shares in total. So the company has issued 20,000 shares, which has been subscribed by Mr. A in how much of shares? 16,000 shares, whereas Mr. B has subscribed how many shares? 4,000 shares. Clear? This is how the breakup of the shares are given. So now coming back to the liability part. So what is the liability? The liability of the company will be up to the extent of number of shares, or I can say the total capital or the issued capital of the company. Up to the extent of issued capital of the company. That means only up to 20 lakh rupees someone can come and put a claim on the company's assets. Up to rupees what? Up to rupees 20 lakhs only. Above that, the company is not liable to pay anything. Clear? Shareholders' personal assets won't be pledged off to pay off the loans, because we know that company is different, the shareholders are different. Clear? Okay. Then there's a distinction between ownership and management. So as I told you, Mr. A and Mr. B are owners of the company, because these are what? These both people are shareholders, and we know that shareholders are the owners of the company. That means they own the company. Tomorrow, whatever profits are earned by the company will be shared between Mr. A and B, and not between Mr. C and D. Why? Because Mr. C and Mr. D are what? Management of the company. These both are managing the affairs of the company. Clear? Okay. Next, maintenance of books of accounts. So any company which is formed, be it a private company, be it a public company, be it a section company, be it a listed company, whatever company it might be, all the companies have a mandatory rule of maintaining the books of accounts as per the AS, because this has been complied by what? This has been mandated by the Companies Act of 2013. So as per the Companies Act, each company has to get its books maintained and get its books audited by a CA. By a CA, the company's book has to be audited irrespective of whatever the turnover the company has. Even though the company is not selling any goods, just making some small tiny expenses in a financial year, in that case also the company's books has to be maintained and it has to be audited by a CA. Clear? All the auditing part we will dealt in intermediate level, but just have a look at it. Clear? Okay. So we're done with the basics, whatever is required for the purpose of your practicals, right? So whatever is required further onwards will be dealt in those particular units. Okay. So let's start with the unit 2 now. Okay. So now let's start with the unit 2, that is my issue of shares. So in case of issue of shares, how to pass the journal entries? What is the forfeiture of a share? What happens when you reissue a forfeited share? What happens when there is a oversubscription, when there is undersubscription? All those cases we will have a look at in this particular chapter. Okay. So first of all, let us understand what is the procedure of raising funds. So through equity. Okay. So let's start with equity only. Equity shares and preference shares are two types. Whereas let's see. So equity and preference I will explain in the further slides, but now understand what is the procedure of raising funds. Okay, let's start. So we issue a prospectus inviting application for share from public. Let us take example. Let us say Reliance Industries wants to issue shares today. Okay, they issue something called as a prospectus. What is the prospectus? Prospectus talks about the company's details, whatever the company has, how the company is performed, what are the areas the company is dealing into, what are the future prospects of the company, how the market condition of the company is, how much growth the company expects in the future years. Why is a prospectus released? So let us say I am a common person who does not know anything about a company. So this prospectus helps me to understand how the company might perform in the future. So today, if I buy the shares of the company, will the value of the shares appreciate or not? So if tomorrow it depreciates, let's say the company doesn't have a prospect in the future. In that case, whatever the shares company has issued will depreciate in the future. So whenever it depreciates, that means I'm making a loss on the shares of the company, right? So because of that, whatever prospectus the company has issued, all the things that is the company has mentioned, I can go through it, and depending on all the details mentioned in the prospectus, I can make a decision whether to buy the shares or not to buy the shares. Clear? So what the company does, it issues something called as a prospectus inviting application from the public. From the public, the company issues a prospectus asking for the money. See, private company cannot issue prospectus because all the shares are placed on a private placement basis. Clear? Only the public companies can go for a public issue by issuing a prospectus and asking money from the public. Clear? Okay. So case number 1. So now the company has issued a prospectus asking for people for money. Let us say they want to issue 10,000 shares. They want to issue 10,000 shares, for example. Okay. Now, what can be the cases? So case number 1. There might be full subscription. That is, application received for all the shares issued. So that means in case number 1, let us say my case 1, people have subscribed for 10,000 shares. In case number 1, people have subscribed for 10,000 shares at rupees 10 each. For each share I have to pay 10 rupees. So that means total worth of issue is 1 lakh rupees. So 1 lakh is the capital I am expecting to get from the public. Clear? Now, in case number 1, people have subscribed to 10,000 shares for rupees how much? For rupees 10 each. In that case, how much money did the company receive? Company has received rupees 1 lakh. How? 10,000 shares into rupees 10 each. That will be rupees 1 lakh. Clear? Okay. This is the case number 1. Now what happens? When the full subscription is done, what happens? Directors make allotment for share applied. So whatever shares are issued, they get the application. From people saying that they want to subscribe to the shares. So 10,000 shares were issued to the public. 10,000 shares has been subscribed by the public. That means public is willing to pay me or pay the company for 10,000 shares. Right? 10,000 equals to 10,000 whatever applications are received. So company puts the application to the company saying that they wish to apply for the shares. Now directors go through all the application, look at the criteria, whatever is to be satisfied, and they allot the shares. Okay, saying that XYZ shares or 5,000 shares will be given to Mr. X, Mr. Y, these many shares. Okay, so in each person's name they issue these many shares. This procedure is called as what? This procedure is called as allotment of shares. Clear? Okay. So once the allotment is done, we receive something called as allotment money. See, on application we receive, let's say, 2 rupees. Out of 10 rupees, I am receiving 2 rupees on application. Remaining money can be received on allotment or final call. That I will discuss in the further slides. So this 10 rupees per share can be divided into small chunks now. It can be received on an installment basis from the people. So what directors might tell is rupees 2 will be given on application, whereas rupees 5 will be given on allotment. Clear? So once the shares are allotted to you, pay me 5 rupees. If the shares are not allotted to you, we will reverse the money received on the application. That's it. Now, then what? After once the allotment is done, just a minute. So once the allotment is done, we go for further calls. Okay, what are these calls that I will tell you? Next, case number 2. Under subscription, that is, application is received are less than shares issued. So that means I am receiving application for, let's say, case 2. Case 2, I am receiving the application for how many shares? Let's say for 5,000 shares, for example, or 6,000 shares for let's take. Let's take 9,000 shares, for example. Okay. So we are receiving application for how many? 9,000 shares only. So that means how much money can I receive? 10 each. That means only 90,000 will be received from the people. That means people are not subscribing to my shares. People are not subscribing to my shares. Clear? See, I wanted to raise how much? 1 lakh rupees from the public, but I am raising only rupees 90,000 over here. And okay, now what happens in this case? So there might be two circumstances. Minimum subscription is issued. So what is the criteria? So whatever issue you go for, out of that 90% should be subscribed. Out of that 90% should be subscribed. In that case, again, the directors will make the allotment of shares. The money will be received for the allotment and the further calls will be made. But let us say the minimum subscription is not received. That means, let's say, for example, only 80% of the shares of the issue is subscribed. In that case, what happens? In that case, the application money will be returned. Whatever money I received on application has to be refunded to the people. Why? Because minimum criteria is not satisfied. What is the minimum criteria? At least 90% of the issue should be subscribed. Let us say for in my example, in this case, out of 10,000 shares, how much is subscribed? Only 9,000 is subscribed. How much percentage will that be? It will be 90%. That means I can go for further allotment. But let us say the subscription is done for only, let's say, 7,000 shares. How much percentage subscription is this? This is only 70% subscription. That means whatever money I have received, that is 70,000 rupees, has to be refunded to the people. Clear? Okay. Then the last part, oversubscription. Now what happens in oversubscription? Applications are issued for more than the shares issued. Let us say case number 3. Case 3. For 10,000 shares of issue, I have received application for, let's say, 15,000 shares. It can happen because, let's say, a company is in too much demand. The company is in too much demand. In that case, what happens? People will try to get more and more shares of the company. So they put the application for more number of shares than whatever is issued. I have a small example for you people. So these are subscription figures for National Securities Deposit Limited, that is NSDL. NSDL is the entity which keeps on the shares of the company. Clear? Whatever shares you have will be in the demat form, in the electronic form. That will be kept in what? In NSDL. Right? Okay. Whatever NSE stock exchange we have is also maintained by the NSE or the NSDL. So subscription numbers as on so and so date. See, there are some classes where retail employees, NIS, that is the national institutional investors, there are institutional investors. Okay, for them, let's take institutional investors, or let's take so let's take retail investors for now. Okay, so for them we have allotted how much? We have kept or reserved how much shares? 175.21 lakhs shares are being kept for retailers. But application, how much is applied in lakhs? 1,359 lakhs has been applied. That means how much is the oversubscription? The subscription should have been one time, right? One time. But the subscription has been for 7 times. 700% of the shares has been subscribed over here. That means people have oversubscribed for these shares. Oversubscribed for these shares. In that case, what the company has to do? In that case, the company has to do something called as pro rata allotment made by the directors. Okay, on this pro rata allotment, there is a best question that is available in the textbook. Generally, the questions, if the pro rata allotment question comes up, the same question will be asked with some different numbers. Clear? Okay. So again, the allotment will be done. The money will be received for allotment, and if there is any money extra with the company, the same money will be refunded to the people. See, in pro rata, what happens is this more than people who are subscribed. These more people who are subscribed will be refunded with the money, and they won't be given any shares. It might happen. See, in case of institutional, you see, 100.12 lakhs has been kept as a reserve for institutional investors, but how much is subscribed? 10,400 lakhs worth of shares has been subscribed. That means it is a subscription of 100 times, 100 times. That means 1000 percentage shares has been subscribed. Got it? So that much of a subscription has been received for NSDL. That means the share is really good because people subscribe so much. That means the shares are really good. Clear? Okay. So this is how you deal with the subscription. Then, okay. This concept we will deal with while dealing with the questions. Okay. Then next. Now, share capital of the company is divided into following categories. Okay. Let's take example now. So as per Reliance, 10,000 shares were issued, right? 10,000 shares. I had told you that 10,000 shares are issued. So before this, what we'll do is, okay, so first of all, we have something called as authorized or nominal share capital. So what does this mean? This means the maximum amount of shares a company can use. You have learned MOA and AOA. In MOA, we have something called as share capital clause, right? For capital, we have a separate clause saying that company can issue 50,000 shares at the rate of rupees 10 each. At the rate of rupees 10 each. That means company has the right to issue 50,000 shares at rupees 10 each without asking the shareholders. Without asking the shareholders, company can issue 50,000 shares. Clear? Now, what does issued capital mean? So basically this is the max limit up to which the company can issue shares. Sir, if company wants to issue more shares, in that case there is a separate procedures which is prescribed in the Companies Act saying that there is a shareholder approval to be received, and then we can increase the limit up to whatever limit we want to. Like let's say for 1 lakh shares also we can increase, but this time we need shareholder approval in the EGM or the AGM, that is the extraordinary general meeting or the annual general meeting. Okay, this depends on each case to case, so that will be dealt in the company law in your intermediate. So issued share. So out of this 50,000, so this is the max limit. Out of this 50,000, how much? Rupees 10,000 shares. Rupees 10,000 shares has been issued at the rate of rupees 10 each. At the rate of rupees 10 each. This is called as issued capital. That means how much money does the company want to raise from the people? How much money does the company wants to raise from the people? So now at this point the company feels that out of 50,000 shares we will issue only 10,000 shares. Remaining shares let it be. We will issue it in the future days. Coming days when the company requires money for its operations, in that case the company can go for the remaining number of shares. But currently we will issue only how much? Only 10,000 shares. Clear? Okay. Then we have subscribed capital. Now what does subscribed capital mean? Subscribed capital means how much ever shares are subscribed by the public. How much shares the public wants to buy from the company. So in this case, let us say company or the people have applied for only 9,500 shares at the rate of rupees 10 each. Clear? People have subscribed only 9,500. We have received application for only 9,500 shares. So that means I want to raise 10,000. The company wants to raise 10,000 shares. But how much is people subscribed? Only 9,500. Got it? There's a under subscription over here. Then we have called up capital. So what does called up capital mean? Let us say the company has the option to divide this into 3 options. 2 for application. Then remaining 5 for allotment. During the time of allotment, people can pay this money, and remaining can be 5 plus 2 7, so 10. So rupees 3 is call. So this is how the breakup will be. Now rupees 2 is received on application and rupees 5 is received on allotment. I will say that how much is called? Only 7 rupees has been called up. Rupees 3 is still pending. So how will I write this? 9,500 shares at the rate of rupees 10 each. Rupees 7 called up. That means if I have to multiply it in monies, in monetary terms, if I have to multiply it, so how much will this be? Rupees 1 lakh. This will be rupees 95,000. Whereas coming to my called up capital, how much is called up? Out of rupees 10, I have called up only rupees 7. 3 rupees is still to be called up. People are subscribed, so they are supposed to pay me. They are supposed to pay me the money tomorrow whenever I ask them to pay. So for now, I have received 2 rupees on application, rupees 5 on allotment. So rupees 7 is received from the public right now. So this 7 rupees will be called as what? I will just erase this. So this rupees 7 will be called as 9,500 shares at the rate of shares at the rate of rupees 10 each. But how much is called up? Rupees 7 called up. So that means how much money is actually received? How much money is actually received? 9,500 into 7. That will be 9,500 into 7 will be 66,500. Sorry. 66,500 rupees has been actually received. See, we were supposed to receive 95,000 from the people because that many shares has been subscribed. So I won't be receiving the money for remaining 500 shares. Remaining 500 shares I won't receive money. Why? Because nobody is willing to buy the shares for 500 shares. Right? Only people are willing to buy how many shares? 9,500 shares. Clear? Okay. So because of this, I have till now received 66,500 rupees. How much is pending to be received? How much is pending to be received? So 95,000 minus 66,500, that will be rupees 28,500 is called as what? Uncalled money. It is called as uncalled money. That means this money is still to be called up. See, company is supposed to receive it, but company has still not made a call, still not asked people to pay the money. This is what is called as call. Clear? Okay. Then we have paid up capital. What is paid up capital? How much our money is actually paid up. How much our money is actually paid up. So that means, see, out of 9,500, we were supposed to receive how much? We were supposed to receive 7 rupees at rupees 7 each, right? But let us say, out of this 9,500, some 500 shareholders have not paid money. In that case, what happens? In that case, the capital varies again. So that means 9,000 people have paid rupees 7 each share, whereas 500 people have paid how much? Rupees 2 each. So how much is totally received? 9,000 into 7 equals to 63,000, whereas 500 into 2 will be equals to 1,000 rupees. So how much is totally received? How much is totally received? Only 64,000 has been received. How much was supposed to be received? 66,500. 66,500 was supposed to be received from the people, but how much have I received? 64,000. So, sir, what is the difference amount then? Whatever difference amount of rupees 2,500 you have, of rupees 2,500 you have is called as call in arrears. Call in arrears. We have a separate topic for that, don't worry. So call in arrears basically means I have called for money, but people have not paid me. They have given me the application. They have given me the application with paying rupees 2 each, but they are not paying the calls and allotment, whatever it might be. Clear? Okay. So this is how you do the breakup of the things. Now, types of shares. Okay, I will just not go in depth into it, a bit glance of it. So what is equity shares? Equity shares is something which is issued to the owners of the company, who will receive the dividends, who will receive the money at the time of what do I say, dissolution. At the time of dissolution, if they are receiving money but not in priority. So let us understand preference shares first. So what do you mean by preference? What do you mean by preference? That they are given priority. With respect to what? With respect to two things. With respect to dividend and with respect to payment. Payment during what? Payment during dissolution. Payment during dissolution. Clear? So that means all these preference shareholders are paid dividend on a compulsory basis. These preference shares have to be paid with a dividend. Okay, and these people, let's say tomorrow company goes into liquidation. In that case, these people have to be done with the payment on a priority basis. So first the payment will be done to the preference shareholders. The repayment will be done to the preference shareholders, and then you pay the equity shareholders. If anything remains, we'll pay the equity shareholders. Why is unfairness? Because equity shareholders have something called as voting rights. These people have something called as voting rights. That means these people have the right to vote in the annual general meeting or whatever the general meeting the company holds. Not in the board meeting, but in the general meeting. Because in the board meeting, only the board of directors have the right to vote. Whereas in the general meeting, be it a EGM or a AGM, in that case, only equity shareholders have the right to vote. Whereas preference shareholders don't have any right to vote. So because of that, they will be given dividend as a compensation. They will be given dividend, and also they will be paid early in case of dissolution. Because at the end of the day, equity shareholders are the main shareholders of the company or the main final owners of the company. So at the end of the day, whatever losses are there after the dissolution has to be borne by the equity shareholders. Clear? Okay. So now let's talk from the point of view of journal entries. Clear? Okay. So first of all, we have first installment. See, what happens when you issue a share? Let's say Reliance issues shares. Okay. Now Reliance is going for a public offer. So what Reliance does is it asks for application from people, because the company won't know who is interested to buy. There are so many people. When I say public, there are so many people, right? So company issues application along with what? Something called as prospectus, right? That we have seen by now. So this prospectus is issued with along with the application form saying that whoever wants to buy the shares of the company, please give us an application so that we should know that you are interested to buy the shares of the company. How much ever shares you want to buy, please mention it in application. Okay. Now what happens? And says that along with application, let's say rupees 10 was the share value. So company says pay us rupees 2 along with the application. Okay. Now what people do? Let's say I am a person who wants to subscribe the shares. In that case, what I do is I want to subscribe for let's say 1000 shares. I want to subscribe 1000 shares of Reliance. Now what I do? Along with this, I pay rupees 2. That means how much should I make the payment to the company? I should pay rupees 2000 to the company. For what? For buying the shares. To show the interest that I am buying the shares. Have I made the full payment? No. Because out of rupees 10, I am making a payment of rupees 2 only. That means how much is pending to be paid? 8 rupees is pending to be paid on each share. That means how much is the total amount? Rupees 8 into 1000 shares. That is 8000 rupees is still to be paid. Right? But currently I am paying only rupees 2000 to the company for what? For application, saying that I am interested to buy the shares. Now on this, how to pass the entry? So whenever I issue application and receive the money, so first I will receive the money, right? So the entry will be, whenever I receive money, what is the entry? The entry will be bank account debited. Why? Because bank is an asset, and whenever asset increases, we will debit the account. Clear? Okay. So bank account debited by how much rupees? By rupees 2000. By rupees 2000. Because I am receiving the company is receiving rupees 2000. Because of that, the company will debit bank account first. Okay. Now, to what, sir? To something called as share application account. Rupees 2000. So why do we create this account? This account is created to have a clear bifurcation in all the different steps. See, there are these many steps, right? So to have a clarity in all these steps, what do? We open a notional account. It is a notional account basically. So basically at the end of the day, it will be categorized as what? It will be categorized as a liability. Why liability? Wait, I will tell you. But right now understand that this share application account, whatever we open, is a notional account just to keep track of all the different steps in the share issue process. Clear? For all the process, we will open separate notional accounts. That I will tell you what to do. Now this is the first entry that you pass because you receive the money, bank account debited, to share application. Now why is share application account credited? Because see, at the end of the day, whatever money I receive, is it an asset or a liability? It's a liability. Why? Because see, we know that capital whatever we receive is a liability. So that means whoever has subscribed to the shares will become the owner of the company. Once the shares are allotted to them. Right? So that means whatever money I have received today is a liability to me. That means tomorrow once the company is closed or dissolved, when the company is dissolved tomorrow, I have to pay back the money to them. I have to pay the money back to them. Right? That's how the company works. So because of that, whatever money I have received is a share application will be the liability. So we know that whenever liability increases, since I have received the money on application and my liability is increasing because of that, what happens? My liability increases, and whenever the liability increases, we will create the account. We will create that account. Clear? Okay, this is the first entry. Next entry is to transfer the share application to something called a share capital. Now, whenever I receive money, my share capital should have increased. My share capital should increase, right? So now the entry will be, the second entry will be to share capital. Why am I increasing share capital? See, whatever capital you used to write in the balance sheet, now in this case, in companies, it will be called as what? It will be called as share capital. Remember the terminologies. Clear? Okay. This will be share capital account. How much have I received towards capital? Rupees 2000 only. Now, why have I created the share capital account? Because capital is a liability, or a capital is a capital. Family number 2, remember? So, whenever capital increases, we will credit the account. Yes. Now, whatever share application money, a share application account I have opened, I have told you that it is a notional account, right? So now I will clear out this account, and whatever balance was remaining in this account will be transferred to what? To share capital account. Now, to clear off an account which has a credit balance, what should I do? I will debit the account. So share application account, share application account debited rupees 2000. Clear? So first entry is passed when I receive the money on application. Then the second entry will be passed when I transfer the application money to what? To my share capital. Where will this share capital go? To the balance sheet on the liability side. On the liability side of the balance sheet. Clear? Okay. This was my first entry. For what? For the stage of application. So my application stage is done. Then we will go to allotment. So what I will do? Depending on how much ever applications are received, I will allot the shares. What do I mean by allotment? Allotment means giving the shares in the name of the people who have paid the money for the application. That means, suppose let's say I have paid money. I want to subscribe how many shares? I wanted to subscribe 1000 shares. Venkatesh want to subscribe to how many shares? 1000 shares. Now, company or Reliance will say that on my name, on Venkatesh's name, I will give how many shares? 1000 shares. But to give the shares, again you have to pay something called as allotment money. You have to pay something called as allotment money. Of rupees how much? Of rupees how much? Rupees 5. Rupees 2 was on application, rupees 5 on allotment. So when I allot you the shares, pay me 5 rupees. So company will allot the shares first and then the person will pay the company. This is the process. See, in application what used to happen? People pay first, or the public pays first, company gets the application. Clear? In the allotment onwards, what happens is company will allot the shares and then people will pay the money. Because see, people should know that they have received the shares. So I will receive a mail saying that congratulations, you have received so many shares of Reliance. I have received 1000 shares of Reliance. So because of that, now I have a confirmation that Venkatesh has a confirmation that he has 1000 shares of the company. Now I am willing to pay how much? I am willing to pay rupees 5 to the company, because now I am confirmed that I will get the shares of the company. If I am not getting the shares of the company, why will I pay rupees 5? Am I a mad person? No. So because of that, once the allotment is done, I will pay rupees 5. Now how to pass the journal entries? Okay, let's start. So I have told you that in this case, allotment will be done first, and then you will receive money, right? So the money, when the entry where you receive the money will be the second entry. So the entry will be the entry will be share allotment account debited to share capital account. So in this case, what I will do? I will increase the value of capital first. And then I will go for the money, receiving the money. So the entry will be 1000 shares into rupees 5, because this time I am receiving the money on share allotment. Right? So because of that, I will again open a notional account called as share allotment account debited. Share allotment account, which again this is also a liability account, but I am debiting it. Why? I will tell you in the next entry. So share allotment is the account which is a liability account which is debited right now. That means I am reducing the value of a liability. But sir, where is the liability created? I will tell you where the liability will be created. Wait. So I will transfer the amount whatever was there on the share allotment to what? To share capital account. Now, how much will the total money be? Rupees 5,000. Rupees 5,000 is received towards what? Towards the allotment of shares. Have I received the money? No. I have just passed the entry. Once I allot the shares, once I allot and send the mail to the people saying that they have been allotted the shares. In that case, I will pass this particular journal entry. Clear? Now, on XYZ date, I will receive money. Right? So again, once I receive the money, what the entry will be? The entry will be bank account debited, because bank is an asset, and whenever asset increases, we will debit the account. How much did I receive on bank account? I have received 5,000 rupees as the allotment money from myself. Right? Then, to what? For what purpose has this money been received? Towards what has this money been received? This money has been received towards what? Towards share allotment account. Rupees 5,000. Alright, now I have created a liability and I have cleared the liability in the previous entry. Clear? So I will just reverse the entries. Whatever the entry was passed on the application will be reversed completely. Simple. Clear? So allotment account will be debited first and then we will create a liability account over here. So at the end of the day, these both accounts will be cancelled off. See, 5,000 rupees, 5,000 rupees. See, at the end of the day, remember this one thing. In this chapter, whatever notional accounts you create, that is share application, share allotment, share final call, whatever account it might be, it has to be cleared off at the end of the day. At the end of the day, by passing any one of the entry, you have to clear it off. Okay. See, the complications will be in case of call in arrears, call in advance. Okay. Other than this, there won't be any complications. And in the forfeiture, yeah, 3 cases, there will be some complications. Except that, there won't be any complications with regards to these simple journal entries. Clear? Okay. So we are done with the second step. Okay. Let us say, we had issued 10,000 shares at rupees 10, where rupees 2 is received on application. Okay, but the company has received application for 15,000 shares at rupees 10 each for rupees 2. Now what will the company do? Now company has to refund money on how many shares? The company has to refund on 5,000 shares at the rate of rupees 2 each share, on rupees 2 each. Right, 2 rupees has been received on application by extra how many? Extra for 5,000 shares. People have already paid me the money. So what is the entry that I pass? So first of all, bank account debited to share application account, how much? Rupees. So bank account debited to share application account is the first entry that I pass. Yes, that we know by now. Account. So how much is the money received? 15,000 into, see, people pay me the money. As soon as I put out the applications, people pay me the money for the application into rupees 2. That will be how much? Rupees 30,000. But how much is the money that I expected? Rupees 10,000 into rupees 2 each. So that is 10,000 into 2, 20,000 rupees. How much more money I have received? I have received 10,000 more. 30,000 minus 20,000. 20,000 why? Because 10,000 into rupees 2 will be how much? 10,000. Sorry, 20,000. So 20,000 was supposed to be received on application, but how much did I receive? I received 30,000 rupees. So that means 10,000 I have received more. So what to do with this money? I will pass this entry. Share application, account debited to bank account. I am refunding the money whatever was received on share application, whatever extra money was received on share application. By passing the entry, share application account debited, I am reversing the amount over here first. Then I am transferring the amount through what? Bank account. And whenever I am making a payment, bank account will be credited. So the amount will be on how many shares? On 5,000 shares, that is received extra. Whatever extra money I have received for the shares, 5,000 into rupees 2 each. On each share I have received 5,000 rupees. So I am refunding how much? Rupees 5 to 10. Okay. On rupees 10,000. 10,000 is being refunded. Then, sir, but again, how much balance remains in this account? Share application account has been credited by rupees 30,000. Then again, it is debited by rupees 10,000. So how much remains in the credit? 20,000 rupees. So what to do with this 20,000 rupees? The entry will be share application debited to share capital account. Remember, share capital account. How much will be credited? So share application account 20,000 rupees was remaining and 20,000 will be capitalized. 20,000 will be capitalized to what? To the share capital account. So basically I am transferring the remaining 20,000 rupees to share capital account. Clear with this? Okay. So now how much remains in share application account? 0. See, 30,000 was credited, 10,000 debited. So that means how much remains? 20,000 in credit remains. So again I debited 20,000 rupees over here. So that means 0 is remaining in share application account. Complete amount has been transferred to share capital account and remaining amount whatever was there has been transferred or refunded to the public again. That is rupees 10,000. See, I cannot keep the money. I cannot ever keep the money that is received extra. Whatever rupees 10,000 I have received, I cannot keep it and issue more shares to them. No. Once I say that, I am issuing 10,000 shares. I should issue 10,000 shares. I cannot say, okay, you have paid me more, so I will keep the money and I will give you the shares. No, because SEBI clearly clarifies that whatever amount has been mentioned in the prospectus as the issue, that amount only has to be issued. Clear? Okay. Next, again, let's come back to the final call. I will just erase this whole thing 1 second. So now we are done with allotment stage also, right? We are done with allotment also. Now the next part, a third part is first call. See, first call, second call, final call. All these are different calls, and this particular part is at the. It depends on the company. Company can directly make the final call, since it pays all the remaining money. How much is remaining? 2 plus 5, 7. So that means 3 rupees is remaining to be received. 3 rupees is remaining to be received from the people, right? Because total value of shares is how much? Rupees 10. So out of rupees 10, rupees 2 has been received on application. Rupees 5 has been received on allotment, whereas rupees 3 will be received on what? Received on calls. Now I can make first call, second call, third call, rupees 1, 3 rupees, or I can do this also, rupees 2 on first call, rupees 1 on second call, or I can do rupees 3 on final call also. It completely depends on the company. It is on company's disposal to call the money whenever it requires, but it cannot call more than rupees 10. It cannot say I will call rupees 4. No, because if it calls rupees 4, 4 rupees plus 5 rupees plus 2 rupees will be 11 rupees. But how much is the company's prospectus mentioning the value of the shares will be? Rupees 10. Company can call only rupees 10. Clear? Yes, okay. So now let us say the company is calling rupees 3 on a final call. Okay. How the journal entry will vary? So first of all, again, company will first make the call. So for once the company makes a call, the company will pass the entry. What is the entry that the company will pass? Share first or final call, whatever the calls, first call, second call, third call, final call, whatever it might be, depending on the question, please mention first call, final call, whatever it is. Okay, first call, final call, account debited to, again, share capital. Why am I increasing share capital? See, before receiving money, I am increasing the value of share capital. Why? Because I am expecting that whoever is supposed to pay me will pay me the money. So expecting that I will increase the share capital on a prior basis. Clear? Now how much is supposed to be received? On this, rupees 3 has to be received, right? So if you add rupees 2, rupees 5, rupees 3, that will be rupees 10. So rupees 3 has to be received. So the entry will be rupees 3 into how many shares? Rupees 1000 shares. So that will be rupees what? 3000. Rupees 3000. Clear? Okay. Now again, people will pay me the money. So what is the entry when people pay me money? So the entry will be, I will debit bank account. Again, bank account debited for rupees how much? Rupees 3000 to what? See, this notional account was created. Remember, this notional account was created. Now I need to clear off this account, because I have told you, whatever notional account we create has to be cleared off once the money is received. Or we know that money will not be received. In that case also, it has to be received. So, it has to be cancelled. So to share first or final call account credited. So by rupees 3000, and we are done with all the journal entries. Clear? This is how you receive all the money and you pass all the entries. Let us say, for example, for 1000 shares, only for 800 shares I am paying the money. Only out of 1000 shares I am paying money only for 800 shares. That means how much money will I receive? That will be 800 into rupees 3. 800 shares into rupees 3. That will be how much? Rupees 800 into 3. That is rupees 2400. But how much was supposed to be received? Rupees 3000. Right, rupees 3000 was supposed to be received, but I have paid how much? Rupees 2400 only. That means some of the people have not paid money on 200 shares, right? But I have told you that this account has to be cancelled. It was debited before for rupees 3000. Now I am crediting this for rupees 3000. That means I am reducing the value over here. So what is the difference amount? See, my debit is not matching with my credit, right? My debit is not matching with my credit. That means rupees, how much? Rupees 600 is pending. Rupees 600 is pending. So where can I put it? I will open a new account called as call in arrears account debit. Calls in arrears account debit. That is rupees 600. See, why have I received, or why have I debited the account? Because I am treating it to be my asset for now. I am treating it to be my asset. I am supposed to receive the money from the people. See, in the bank account I was supposed to receive the money, but did I receive the money for 200 shares? No sir, I have not received the money for 200 shares. Because of that, I am debiting the account to adjust whatever the balance is remaining, and I am treating this as a asset which is to be received from the people. Whenever I am supposed to receive money from someone, it will be my asset. Right? Okay. So I am debiting what? Calls in arrears account debited. Clear? Okay. Now let us take one more example. Okay, I am just changing the example. So this is what calls in arrears is. But let's say tomorrow. Okay, let's finish off this example first. Tomorrow I am receiving the money on call in arrears. Tomorrow the person says, whoever has 200 shares will come to me and say, sir, sorry, I will pay you the money. Okay, so in that case what to do is, whatever account was debited, is it required now? Since he is paying me the money, is it required? No. So I will credit the account. It was debited before. Now I am reversing it by crediting it. Calls in arrears account credited by rupees how much? Rupees 600. Now he has paid me the money for the 200 shares, right? How much? 200 into 3 rupees each, the call money. So the entry will be again bank account debited for rupees 600. What is this? 200 shares into rupees 3 each. Clear? This is what calls in arrears is. Fine. See, there is interest on calls in arrears also. That is up to an extent of 10% can be charged for the calls in arrears. Remember this, up to 10% can be charged on calls in arrears. Clear? That means if you are paying me the money late, if a shareholder has paid me the application money, has paid me the allotment money, but has skipped to pay me the calls money, first call, second call, third call, whatever it can be, whatever call we have done on that, if the money is yet to be received, in that case that will be transferred to calls in arrears. And whatever delay he does, 1 month, 2 month, 3 month, depending on the number of months of delay on the time weight basis, I will charge him interest on this. So for example, in this case only, he has paid me the money in 3 months delay. So the interest on that will be equals to 600 into 10%. 10% is the maximum amount that can be charged. Look at the question. If the question specifies any rate other than 10%, take it. Okay. But if it is 12%, no. You should mention that since the rate that can be charged on calls in arrears is 10%, maximum is 10% as the Companies Act 2013, I will charge 10% only. But if the rate says 9%, take 9%, because 10% is the maximum rate that the company can charge for the delay. But company can charge below that also, because it's the maximum, right? So into 3 by 12, because for 3 months there's a delay, right? So the amount will be 600 into 10% into 3 by 12. So that will be rupees 15. 15 rupees will be the interest on calls in arrears. Now, how will I collect this? So the entry for this will be, interest is the income or expense in this case. Tell me this, on calls in arrears, if I am supposed to receive interest, will it be an income or an expense? It will be an income. So because of that, 2 interest on calls in arrears. Okay, this is my first entry. Debit what? Debit shareholders account. Why? Because shareholder will be my asset in this case. So because of that, 15 rupees as the interest is pending on the calls in arrears. And tomorrow once he pays me the money, the entry will be bank account debited to shareholders account. I am crediting shareholders account because it was debited before. Now I am clearing it off by crediting the entry, right? So to shareholders account rupees 15. You can club this entry with this entry also. How will you club this? I will just change the question over here, or I will just change the journal entry for you people. If you want to club, you can club it, no issues. If you want to club it, the entry will be, so in bank how much will you receive? You will receive 600 for the shares plus 15 rupees for the interest. So the total amount you receive will be 615. Out of that 615 rupees, 600 rupees will be adjusted towards what? Calls in arrears, because you have opened calls in arrears account over here before. Remember that you are clearing it off over by passing this entry. Then where will 15 rupees go? The 15 rupees will be charged to shareholders account. Shareholders accounts, 15 rupees. So in short, I have clubbed this particular entry in this entry itself. This you can do, but this particular entry has to be passed separately. Remember, okay, this particular entry has to be passed separately, but you can club this entry with the receipt of calls in arrears money. Clear? Okay. So this was calls in arrears. Now I have told you about calls in arrears, right? Now let's see what is call in advance. Okay, call in advance. So let us say the procedure was for application. For application I am receiving, let's say, rupees 2. For allotment, rupees 3. Then first call rupees 3. Then for final call I am receiving rupees 336 plus 2 2 rupees. Now what happens is a person having 200 shares is paying me first call money in advance. I have not made a call. Let's say first entry, what is the entry? See, application is done. Okay, don't worry about application, skip it. So in allotment case, how much is supposed to be received from one share? Rupees 3. But this guy has paid me rupees 6. That means total money of rupees, first call and allotment. So what is the journal entry first? First of all, what entry do you pass? You pass share allotment account debited to what? To share capital account. This is the first entry that you pass. Remember, Okay. Now what is the money? How much is the money to be receivable? How much is the money receivable on the allotment? Let us assume we are dealing with 1000 shares from different people. We are dealing with 1000 shares. So 1000 shares into rupees 3, because for allotment how much is supposed to be received? Rupees 3. Okay. So how much will that be? Rupees 3000. Fine. Then bank account debited. Why? I am receiving money now. This time I am receiving money. Bank account debited to share application account is the entry that I pass. Remember, to cancel the application account opened over here, I am transferring the money by crediting this to the bank account, right? Okay. How much is received actually? I am telling you that out of 1000 shares, there are two category people now, of 800 shares and of 200 shares. So people who have subscribed for 800 shares have paid me rupees 3. No issue. Why? Because they have to pay me rupees 3. But this idiot has paid me how much? This idiot has paid me rupees 6. Now. What to do? With this? Okay. Let's see how much money is received first of all. How much money is received? 800 into 3 will be how much? Rupees 2400. And 200 into 6 will be how much? 1200. Okay. So how much is the total money received? 2400 plus 1200. That will be rupees 3600. That means see, I was supposed to receive 3000 rupees. But how much have I received? Rupees 3600. Arey sir, I have received more rupees 600 rupees, right? I have received 600 rupees more. Now what to do? Let's see what to do. See, in bank account, how much is received? In bank account, I have received 3600. But I have to cancel how much for, okay, this is share allotment. Sorry for my mistake. This share allotment. Now, how much is supposed to be cancelled for share allotment. Can I cancel rupees 3600? No, because for allotment, how much is to be received? Only rupees 3000. So I will cancel rupees 3000 only. But sir, there's a difference now. There's a difference of rupees 600 in debit and credit, right? What to do with this? That means, see, this person, this idiot has paid me money in advance, right? He has paid me money saying that, you take my money and adjust it with whatever the calls you make in the future. So that means he has paid me money in advance. In advance, he has paid me the money. So now what to do? Now I have considered this over here because, see, I have made the computation over here and 3600 has been received in total. How much was supposed to be received? 3000. So that means I have received some money in advance. Did I call for the money? Did I call for rupees 3 extra? Out of rupees 6, 3 rupees is for allotment. Okay, I have called the money, he paid me rupees 3. But why did he pay me 3 rupees extra? Did I call for the money? No. That means it's a liability. That means I have the money which is not my money yet. When will this be my money? Whenever I make the first call or the final call. Did I make the call over here? No. I am still in the allotment procedure. This person being too much happy has paid me 6 rupees. Take 6 rupees. You want 3 rupees? I will pay you 6 rupees. Okay. So now I have a money which is not my money yet. That means it's a liability. And we know that whenever liability increases, we will credit the account. We call it as call in advance. Account. How much is paid in call in advance? For 200 shares, he has paid how much in advance? In rupees 3. Rupees 3 he has paid me in advance, right? Because of that, how much is pending? 600 rupees is received as an advance. Done. And clear till here? Okay. Going further. So we are done with what? We are done with allotment procedure where a idiot has paid me 600 rupees more. For what? For the first call. Now let's pass the entry for the first call. Let's see. What is the entry that you pass for the first call? The entry will be share first call account debited to share capital account. How much is supposed to be received? On 1000 shares. On 1000 shares, rupees 3 is the first call. Right? So 3000 rupees is supposed to be received over here. But how much will I actually receive? I will not receive the whole amount. Why? I will tell you. See, there were 1000 shares. Right? Out of these shares, there are 2 people now. 800 shares and 200 shares. Right? 200 shares wala is the biggest idiot. He has paid me money in advance. What a fool. So, how much will this guy pay me? How much will the person with 800 shares will pay me? He will pay me rupees 3. How much will that be? 800 into rupees 3 will be 2400. But how much will this guy pay me? He will not pay me anything. Why? Because this idiot has paid me in advance. Because of that, will he pay me again? No, because he will tell, okay, on the allotment stage itself, I have paid you the money. So don't ask me the money again on the first call. For the final call, okay, I have not paid the money. On final call, you can ask me, but for the first call, you should not ask me the money. That means we have the money that was paid in advance to us. Right? So he will not pay me any money. So how much will I receive in the bank account? So bank account debited. How much will I receive in the bank account? Rupees 2400. But how much was supposed to be cleared for first call account? How much is supposed to be cleared? By crediting this, how much will I clear? Share first call account. How much? Rupees 3000. Rupees 3000. Right? Because it was debited by 3000 rupees. Now I am clearing it off by crediting it by rupees 3000 again. Okay. But there's a difference between debit and credit now. Yes, now I do clear this debit by rupees 600 on debit side. Now what to do? See, now I need to adjust whatever was received in advance. With the first call now, with the first call, because now I'm making the call. That means whatever money was a liability for me is no more a liability for me. Is no more liability. Why? Because I'm making a call. Now it's my rightful money. It is the rightful money that I was supposed to receive. In case of this 200 shares, I received it in advance. That's the only case. Now since I am doing the call over here and I'm passing this entry, that means it becomes my rightful money. It becomes my rightful money. Because of that, what I will do, whatever liability account I have opened over here, I will clear it off. How to clear the liability account? By debiting it. So the entry will be call in advance, account debited by rupees how much? By rupees 600, and by this I clear the call in advance account also. Now coming to the interest part. So as I told you, on calls in arrears I am supposed to receive maximum of rupees of I am supposed to charge 10% maximum interest. But in case of call in advance, see, if I am not receiving money, it's calls in arrears, right? It is calls in arrears. I am charging him money. If someone is paying me money in advance, I have to pay him interest now. Companies Act says when you are charging money for calls in arrears, then why are you not paying any interest when someone is paying you the money in advance? So because of that, I will pay call in advance how much? At the rate of 12%. So maximum 12% can be given as a interest on calls in advance, right? So when question does not talk anything about the interest, please mention 12% as the interest. Clear? So now coming to the same part again. What is the journal entry? So again, in this case, if I am paying the interest, will it be an income or expense? Whenever I am paying for the interest, it will be an expense, right? So interest is an expense. So whenever expense increases, we will debit the account. So interest on call in advance, account debited. To what? To shareholders account. Then while making a payment, again shareholders account debited to bank account, because I am making the payment, right, to bank account. Again, how do you compute the interest? Again, simple, 600 into 12% into month divided by 12. Simple. How much ever months advance he has paid me, multiplied by that. Simple. Done. Okay. And you can also club the entries with this entry. Okay, that also option is available to you. But if you are getting confused, you can pass two different separate entries. Done. So calls in arrears part is done. Premium is remaining. Premium part I will deal while dealing with the question separately. Okay, because it will simply confuse you for now. So now we'll start with the questions on the same. Okay. So first of all, we have illustration number 3. So let's look at the question. On 1st April 2021, A Limited issued 43,000 shares of rupees 100 each, payable as follows. So 20 on application, 30 on allotment, 25 on 1st October, and 25 on the 1st of February. So this will be my what? This will be my first call, and this will be my second call. Sorry, final call. Okay. Then what they have told us? By 20th May, 40,000 shares. So out of 43,000, 40,000 shares were applied for, and all the applications were accepted. Why? Because it's an under subscription. And first of all, see whether it's a 90% subscription or below that. Let's see what have they done. So 40 divided by 43. So around a percentage of 93% subscription has been done. So that means minimum subscription of 90% has already crossed out, right? Okay. Now allotment was made on 1st of June. Fine. So whatever money we have received for that, we have made a allotment on 1st of June. All the sums due on allotment were received on 15th of July. Okay. So some receipt date is also given to us. Those on first call were received on 20th October. So journalize the transactions when accounts were closed on 31st of March 2022. Okay. So let's start. So first entry. What will be the first entry? The first entry will be the receipt of application money. See, first we don't pass the application entry directly. Why? See, in this case, what has happened? 43,000 shares were issued, but how much was subscribed? Only 40,000 were subscribed. So if I pass the main entry, that is share application account debited to share capital account, what will happen? I will pass the entry for 43,000 shares because I don't know how much will be subscribed. But how much is actually subscribed? 40,000. So because of this, I need to again amend the entry. So because of this, to avoid this whole issue, what I do is I pass the bank entry first or the receipt entry first, right? So what is the entry? First of all, when did I receive the application money? As per the question, so on 20th May, 40,000 shares were applied and were accepted. So on 20th of May, the first entry will be on 20th of May 2022, right? No, 2021. 21. So we have received the money. So bank account will be debited. 2. Share application account. I am creating a notional liability account. To bifurcate all the different stages. All the different stages over here, right? So bank account debited to share application account. Now what is the amount? So how many shares were subscribed? 40,000 shares. 40,000 shares into how much per application? Rupees 20, right? So how much will that be? 40,000 into 20 equals to 8 lakh rupees. So we have received 8 lakh rupees on what? On the application. Okay. So once the application money is received, what should I do? I should transfer this money to the share capital. So now the second entry will be on what date? See, the allotment was made on 1st of June. So on 1st June, the entry will be transferred to the allotment. Why? The share capital. Why? Because see, we will wait for all the applications to be received and we will give them a cutoff date. So once the cutoff date is done, we will start with allotment. So in my case, on 1st June, the allotment was started. So on that date itself, I will transfer all this money to what? To my share capital. Clear? Okay. So let's start. So on 1st of June 21, share application account will be debited. Why? Because I need to reverse whatever was passed before. Share application account debited to share capital account. To share capital. Now I am increasing the value of my share capital on the liability side. On the liability side, I am increasing the value of my share capital. So whenever the share capital increases, I will credit the account. So by how much? Again, rupees 8 lakh. But sir, for 3,000 shares there was no subscription, right? For 3,000 shares there was no subscription. What to do with this? Do nothing with that. See, people have not paid money for the 3,000 shares. No issues. We have received money for 40,000 rupees, right? So just keep it with you. Done. That's it. Okay. Going ahead. So this is done. Now next, on what date? Then the sums due on allotment was received on 15th of July. But when was the allotment made? On 1st of June. So again, on the same date, share allotment account debited to what? To share capital account. At this time, how much is the allotment? Rupees 30 per share into 40,000. So 40,000 shares into rupees 30 per share. Okay, how much will that be? I think 12 lakhs. 40,000 into 30. So 12 lakhs is the value of allotment. So I should receive 12 lakh rupees on allotment from the people. See, now I know that how many shares are already subscribed. So I know that the people will pay me 30 rupees for the allotment. So because of that, now I am passing this entry ahead of what? The receipt of payment. Right? So now, when was the amount received for allotment? All the sums due on allotment were received on 15th of July. So now, on 15th of July 21, what do I receive? I receive money in the bank account. So bank account debited to what? To share allotment account. I'm clearing off the share allotment account which was created before. Right? So for how much? So as per the question, whole of the amount is received. Whole of the amount from allotment is received. So 12 lakh rupees. Okay, done. So next what has happened? Again, then we'll go forward to the final call. So when was the final call done? On 1st of October. When was the money received on the first call? On 20th of October. So pass the entry for 1st of October when the first call was made. So when was it? On 1st of October for rupees 25. On 1st of October 21, first call was made, right? So share first call account debited to what? To share capital. To share capital account. What is the amount? So on 40,000 shares, we have received how much? Into rupees 25. 40,000 into 25. That will be rupees 10 lakhs. 10 lakh rupees we have received on first call. No, so we have not received. We are yet to receive. So now, when was the money received? On what date? The first call were received on 20th of October, right? So 20th of October. On 20th of October 21. So I have received the money. So bank account will be debited, obviously. Bank account debited. 2. Again, I will clear off the first call account. To share first call account, because it is no more required since I have received all the money, right? So 10 lakh rupees. See, whatever narrations are there is to be taken care by you people. Clear? Whatever narrations are there, please take care. So, and also remember to mention these things, because these things becomes really important in examinations. Clear? Or else examiner won't know how you have computed the values. So please mention all of them somewhere. Then next, final call. At what date the final call was done? On 1st of February. So 1st Feb 22. Share final call. Share final call. Account debited. Account debited to share capital account. Share capital account. How much is the value? Again, I think 25 rupees. Yeah. So 25 rupees. Same the value will be. So 40,000 shares. 40,000 shares into rupees 25 each share. So that will be again 10 lakh rupees. Then again, but this time if you see on final call they are not mentioned when was the amount received. So we are assuming that the amounts are received by the year end. Clear? Okay. In the books also the same assumption has been taken, that on 31st March 22 the amounts are received. So on this date bank account debited to share final call. To share final call account. So that will be rupees 10 lakhs. Okay. So if you are getting confused with the entries what to pass, see, always remember for each step there will be at least two entries. At least two entry. One entry will be the receipt of money on that particular step, and one more entry will be to make it due. Clear? See, for first application step only, we will just reverse the entries where we receive the money first and then we will pass it to share capital. But subsequently from allotment step onwards, we will first make it due. We will first pass the due entry, transfer it to the share capital account, and after that we will receive the money on the subsequent date. Clear? So same goes for first call, same goes for your final call also. First you will make it due by passing this particular entry, and then you will make the entry for the receipt of payment. I have told you the logics also behind this. Clear? Now going ahead. So our first question is done. So now look at the next question. This is my illustration number 4. Pant Limited or Pant Limited, whatever it is, invited application for 50,000 equity shares at rupees 50 each. So each share will cost rupees 50. That is my nominal value, which are payable as on application rupees 20, allotment rupees 10, first and final call rupees 20. So 20 plus 10, 30 plus 20, 50. The company received application for 60,000 shares. So what is the case? What is the case over here? Oversubscription. Why? Because see, I have requested for 50,000 application, right? But how much have I received? 60,000. The applications were received for 60,000 shares, right? The directors accepted the application for 50,000 shares. Obviously, they should accept only 50,000 share applications. They cannot they cannot approve the application for the remaining 10,000 because they have already asked for 50,000. So you cannot accept for more than that. Less than that, you can agree. No issues. And rejected the rest. Okay. Show the journal entries if the company refunded the amount of money money to the rejected applicants, and allotment money was received on 45,000 shares. Okay, let's see what to do. I am here. So first of all, write it down. So for application, I have received how much? Rupees 20. Then on allotment rupees 10, and then on final call rupees 20 again. Fine. So now I need to pass the journal entries, right? In this case there are no dates, so I will just pass with numbers. So first one. So first entry will be for what? Always the first entry will be for the application money received, right? So bank account debited to what? To share application account. To share application account. Okay. Now, how much is the money that is received? How much is the money that is received on application? For how many shares I have received the money? I have received the money for 60,000 shares. Not 50, but 60,000 shares. Right? Into how much have I received? How much have people paid me? Rupees 20 per share. So, 60,000 into 20 will be rupees 12 lakhs. So, 12 lakhs has been received on application. But do I need 12 lakh rupees? No. So, now what to do? Let's see. So, now what to do? So, now I need to transfer this share application to what? To my equity share capital. to my equity share capital, right? So I will debit the entry to share capital account. Share capital. How much should be reversed on share application? For whole of rupees 12 lakh should be reversed, because I have told you that whatever share application, the notional accounts that you open should be cleared off in that the next subsequent entry itself. Remember? Okay. Now to share capital, how much should I transfer? Tell me. To share capital, how much can I transfer? I can transfer only 50,000 shares. I can transfer only 50,000 shares, not the whole amounts, into rupees 20 each. Remember, because I have rejected the remaining application of 10,000 shares, right? So 50,000 into 20 will be rupees 10 lakhs. Now, there's a gap between the debit and credit, right? There's a gap between debit and credit over here. So what to do with this? What to do with this? Tell me. So the remaining 2 lakh rupees, whatever you have should be refunded. Whatever 2 lakh rupees you have should be refunded. So that will be transferred through bank account. So since bank account balance is being reduced, whenever I receive money, bank account will be debited. So whenever I pay money, bank account will be credited now. So to bank account, what? Rupees 2 lakhs. 2 lakhs will be refunded through my bank account to the remaining 10,000 shareholders. Clear? Okay. After this, next what has happened? Next, let's go to the allotment step. So now in the allotment, what to do? First we should pass the due entry, and then we should pass the payment entry, right? So third one, share allotment account debited. Allotment account debited to what? To share capital account. To share capital account. How much? Rupees. How much is the value? 10 per share, right? So how much applications? 50,000 applications. 60,000 we have refunded 10,000. So the remaining shares we have is of 50,000 only, right? So into 10 rupees. 10 rupees, right? So that will be rupees 5 lakhs. Rupees 5 lakhs. Now, but now what has happened over here? Tell me. Second entry will be the bank account. Why? I am receiving the money. But how much have I received? As per the question, allotment money was received on only 45,000 shares. How much was subscribed? 50,000. But how much is received? 45,000 shares. That means some idiot has not paid the money. Some idiot who has put in the application but is not paying me the money now. So what will this be called as? This will be called as calls in arrears. This will be called as calls in arrears, because he was supposed to pay me money. Company has asked for the money, but has he paid me the money? No. So because of this, it will be called as calls in arrears. So let's see the entry. So in bank, how much is received? 45,000 shares. Shares into rupees 10 each. How much will that be? Rupees 4.5 lakhs. 4.5 lakhs. But this account should be reversed now. This account, whatever we have, should be reversed, right? So to what? To share allotment account. To share allotment account. How much? Rupees 5 lakhs. 5 lakhs. But now there's a gap again, right? There's a gap between this and this. So what will this be called as? This will be called as calls in arrears. Arrears account debited on 5,000 shares at the rate of rupees 10. How much will that be? Rupees 50,000. 50,000. Why? Why is calls in arrears debited over here? What is the reason for that? Because I am supposed to receive this money. I am supposed to receive. The company has called for allotment money. Company has asked, pay me the allotment money now. But this guy holding 5,000 shares has not paid the money. That means it is company's money, but he is not paying it now. He is not paying it now. Even though company has asked it, he is not paying it. So because of that, it will be taken as an asset. It is a receivable amount. It is a receivable amount for the company. Because of that, it will be taken as an asset and it will be debited over here. Clear? Okay. So we are done with the entries. So for final call, they have not mentioned anything over here. If you want, you can pass the entries for the final call also. Okay. What is the entry? First entry will be the share final call account debited to share capital account. What will be the value? 20,000. Sorry, rupees 20 per share into 50,000 shares. Even though he has not paid the money, you should pass the entry for 50,000 only. Due entry will be always be passed for whole amount unless and until the shares are forfeited. That concept I will teach you further. But if the shares are forfeited, in that case only I will pass the entry for lower shares. But in this case, this person might pay me in the future. He might pay me in the future. So I will pass the entry for whole 50,000 shares due for first and final call also. Right? And while receiving it, if he doesn't pay again, I will again show calls in arrears. Simple. Done? Okay. So we are done with illustration number 4. So
Let's start with illustration number 9. Rashmi Limited issued at par rupees 1 lakh equity shares of rupees 10 each, payable 2.5 on application, 3 on allotment, 2 on first call, and the balance on the final call. Fine. All the shares were fully subscribed. Very good. Mr. Nair, who held 10,000 shares, paid full remaining amount on the first call itself. So what this guy has done, see, we had made, first of all, let me just write it down for you people. So on application, how much was supposed to be received? Rupees 2.5. Okay. Then on allotment, how much was supposed to be received? Rupees 2. First call rupees, on allotment rupees 3. On allotment rupees 3, on first call rupees 2. Then on final call, the remaining amount, that is 2.5 plus 3 plus 2 equals to minus 10, that is 2.5 rupees. So 2.5 rupees was supposed to be received on the final call. Okay. Now what Mr. Nair has done, who held 10,000 shares, Mr. Nair is a person who is holding 10,000 shares, has fully paid the remaining amount on the first call itself. So that means these two amounts he has paid together. He has paid together on the first call itself. He had too much money with him, so he has paid the whole amount together in the first call itself. Now what to do? Let's see. This will be called as what? This will be called as what? A call in advance. He has paid me the money of the final call during the first call itself in advance. In advance, he has paid me. He has more money. He has paid me. Take and go. Okay. Now, the final call which was made after 3 months, from the first call was fully paid. Okay. Except a shareholder having 1,000 shares who has paid his due amount after 2 months along with the interest on calls in arrears. So now what has happened? On the final call, everybody has paid me the money. See, the difference between these both is 3 months, remember. Okay. From first call till the final call, 3 months difference is there. So for 3 months, why is this question, this part given to us? For computation of interest. Why? Because Mr. Nair has paid me the money of 2.5 on first call itself, right? So we have the money from first call till what date? Till final call. That is how much? For 3 months here we have his money, which was not called for. So that means I have to pay him something called as interest at the rate of what? At the rate of 12%. Sorry. At the rate of 12%. Clear? Okay. Now, then what has happened? Okay. Now for the final call, everybody has paid me the money. But what has happened? Except a shareholder having 1,000 shares who has paid how much? Who has paid his due after 2 months along with interest in calls in arrears. That means a person who was having 1,000 shares, has not paid me the final call. But when did he pay me? After 2 months. After 2 months he paid me the money for this. So why is 2 months given again? Again on calls in arrears I have to charge him interest at the rate of 10%. Clear? At the rate of 10% I have to charge interest for 2 months because he has paid me the money. They have clearly told us that he has paid me the money on calls in arrears. So because of that, I will pass the entry after 2 months on the final call for 1,000 shares. Okay. Now what to do? Company also paid interest on calls in advance to Mr. Nair. Okay, fine. We know that. Give the journal entries to record these transactions. Now we need to pass the journal entries. Let's start. So first entry, when we receive the application money. So dates are not given to us again, so skip it. So first of all, bank account debited to what? To share application account. To share application account. What will be the entry? For how much? For 1 lakh shares. 1 lakh shares into rupees. Rupees how much? On application. Rupees 2.5 per share. That will be how much? Rupees 1 lakh into 2.5. I think 2,50,000. Yes. So 2.5 lakhs. 2.5 lakhs is received on application. Now I need to transfer the money. I need to make the allotments, right? So reverse the share application first of all. Share application account debited. Account debited. To what? To share capital account. Share capital account. How much? Again 2.5 lakhs. See, because the question clearly says that all the money was paid, right, on application. See, all the shares were fully subscribed. That means we have received the money for 1 lakh shares also. Clear? No under subscription, no over subscription. Done. Then third entry. Third entry is for what? For the allotment procedure, right? So allotment entry will be what? Share allotment account debited. Share allotment account debited. Two, share capital account. Share capital account. This is the due entry for share allotment. I have to receive the money for share allotment. How much? 1 lakh shares, 1 lakh equity shares into what is the amount for allotment? Rupees 3. So rupees 3. So how much will that be? Again 3 lakh rupees. 3 lakh. Did I receive all the money? Did I receive all the money on the application, on the allotment? Since nothing is given to us, since nothing is given regarding the allotment, we will assume that everything is received. Clear? So bank account debited to share allotment account. Share allotment account. So rupees 3 lakhs. Clear? Okay. Now going further. Now comes the main part. Okay. Now the first call has come. Okay. First of all, pass the due entry. First of all, simply pass the due entry. Let's go through it once again. I have taught you in the theory part, but let's go through it once again. So first of all, pass the entry. So the first entry will be share first call account debited. First call account debited to share capital account. To share capital account. Now, how much was supposed to be received? Rupees 2 was supposed to be received. Rupees 2 was supposed to be received on first call. So, on 1 lakh shares into rupees 2. So, how much will that be? 2 lakhs. But what has happened over here? Mr. Nair, who held 10,000 shares, fully paid the remaining amount on the first call itself. So, that means Mr. Nair has paid me the money in advance along with final call. So let's compute it first of all. How much is received in the bank account on the first call? So for 1 lakh shares, or else I will divide 1 lakh shares. I will divide 1 lakh shares into two parts. 10,000 shares of Mr. Nair. 10,000 shares of Mr. Nair. So remaining shares will be 90,000. 90,000 shares. So these 90,000 people have paid how much? Have paid rupees 2. Sorry, rupees 2 or 3. Okay, rupees 2. Rupees 2 on the first call. So how much will that be? 90,000 into 2. Sorry. Rupees 1,80,000. But along with this, how much has the person having 10,000 shares have paid? He has paid rupees 2 plus rupees 2.5. Why 2.5, sir? Because 2.5 was supposed to be received on final call, and as per the question, he has paid the remaining amount on the first call itself. So we will assume that he has paid all the final call money on the first call itself. So how much has he paid? Rupees 4.5. How much will that be? So 10,000 into 4.5, 45,000 he has paid. Now tell me how much is received in the bank account. Add both of them. So 45,000 plus 1,80,000 equals to 2,25,000 has been received on what? Has been received on first call. Clear? Rupees 2,25,000 has been received on first call. How much was supposed to be received? Only rupees 2 lakh. But how much did I receive? 2,25,000. So how much is the amount that is called in advance? How much amount belongs to call in advance? Only rupees 25,000. How will you compute this? 10,000 shares. 10,000 shares into final call, into the value of final call, this is 2.5 rupees. So that will be rupees 25,000. Clear? Okay. Now pass the entry. So sixth one. Bank account debited to share first call, because I need to clear the entry for the first call. First call account. How much is received in the bank account as per my computation? Rupees 2.25 lakhs. 2.25 lakhs. But how much was supposed to be cleared on first call? Only rupees 2 lakh. So 2 lakh. There's a difference between debit and credit. So what to do with this? This will be the call in advance. Rupees 25,000 or 25k, whatever you might want to write, you can write, or else I will mention it as 0.25 lakhs. Clear? This is how you pass the entry for call in advance. Now, what can I do with this call in advance? See, first of all, why is it credited? What is the logic behind this? I have told you before. So what is the logic behind this? See, I have not called for the money. I have not asked the money yet, but he has paid me the money. So that means it's a liability for me. It's a liability till the date I make the call for the money. Right? Since I have not made the final call yet, that means he has paid me the money already. So because of it becomes a liability for me. So whenever it becomes a liability, I will credit the account to show the increase in the value of liability. Clear? Okay. Now the last part where share final call account debited to what? To share capital account. To share capital account. How much was supposed to be received on final call? Rupees 2.5 into 1 lakh shares. 1 lakh shares. 1 lakh shares into rupees 2.5 into 2.5 equals to, so 2.5 lakhs was supposed to be received. Now what to do? Now the next entry is for the receipt. But during the receipt, what has happened over here? See, this guy with 10,000 shares has already paid me the money, right? The whatever the money was supposed to be received on the final call has already been received by me. Okay. Then what has happened? Then within 3 months the final call was made from the final call was made within 3 months after the first call was made. It was fully paid except a shareholder having 1000 shares who has paid his due amount after 2 months. That means when I received the money from all the shareholders, did he pay me? No, he did not pay me. So because of that, it will be a call in arrears. So we need to find out the amount first of all. So let's find the amounts first of all. So where can I compute? Okay, let's do the computation over here itself. So let's bifurcate 1 lakh shares. So we have 1 lakh shares. Out of this, 10,000 shares wala guy has paid in advance. How much has he paid in advance to me? Rupees 2.5. That was receivable on the final call. He has paid me in advance. So how much will that be? If I multiply this, how much will that be? Rupees 25,000. Rupees 25,000. Then one more guy with 1,000 shares has not paid me. How much? Rupees 2.5. Right. So rupees 2,500 not received. I will just mention not received so as to not have any confusion. This amount is not received. Clear? Okay. Then next, remaining how much? 10,000 plus 1,000 minus 90. Sorry, minus 1 lakh. That will be rupees. Sorry, 89,000 shares. Remaining shares are 89,000 shares. So now on these shares, how much will people pay me? Rupees 2.5. These are normal people who pay on time, right? They don't pay early, they don't pay late, they pay me on time whenever I ask the money. So how much will that be? 89,000 into 2.5. That is 2,25,000. Now tell me, sorry, 2,22,500. Sorry, 2,22,500. Now tell me, how much was supposed to be received as per my journal entry? Let's look at the journal entry once. Okay. As per this journal entry, as per the final call journal entry, how much was supposed to be received? 2.5 lakhs. But how much did I actually receive? As per my working note, I just mentioned final call. Okay. How much did I receive on the final call? Actually, just look at the working note and tell me. Just look at the working note and tell me how much did I receive on the final call. I have received only this amount. Currently, on the final call, in the bank account, I have received only this amount. But what about this amount, sir? When was this amount received? When was this amount received from 10,000 shares? This guy has paid me during the first call itself. Remember, this guy has paid me during the first call itself. So I did not receive the money again in the bank account. I have already passed the entry here. Remember, see, in this bank account entry, I have already included this 25,000 rupees over here. So that means remaining only 89,000 shareholders have paid me. What about this guy? This idiot did not pay me only. It is called in arrears. Remember, not received. This guy did not pay me only. It is called in arrears now. Clear? Okay. So now pass the journal entry. Let's see how to pass. So first of all, bank account will be debited. That we know. With how much? Rupees 2,25,000 rupees. 2,25,000. So 2,22,500. Sorry, 2,22,500. Okay. Now to share final call. To share final call account. How much is to be cleared off from final call? Rupees 2.5 lakhs, right? So rupees 2,50,000 rupees. But is it tallying over here? No. Why? Because one guy has paid call in advance and one more guy has done call in arrears. He has not paid me only. So first of all, let's deal with call in advance guy. So the guy who has paid me 10,000 shares worth on the earlier first call itself, right? So see, now I have made the call. Now I see, before this was categorized as what? As a liability. Why? Because I did not ask for the money. But now I have asked for the money. So should it be as a liability still in my balance sheets? Should it be shown as a liability in my books now? No. So I will clear this liability. How will I clear this liability? By debiting it. So calls in advance. Call in advance. Account. Debit. How much? 25,000. 25,000. Clear? Okay. Now after that, there is one more guy, there is one more idiot who has not paid me. This person has not paid me. Right? This is called in arrears. So as per the previous example what I told you, remember in the previous illustration there was a call in arrear. So call in arrear becomes my asset. Call in arrear becomes my asset because I have asked the money, he has not paid me. It is receivable on a future date. It is receivable on a future date. So because of that, it is an asset, and whenever asset increases, we will debit the account. So call in arrears account debited. Rupees how much? 2,500 I guess. Yes, 2,500 is not received. So rupees 2,500. So just add and check if everything is matching. Plus 2,500. So the total of this will be equals to this. So we are done with the entry voucher. But are we done? No, we are not done. Remember interest. Okay. So let's pass the entry for interest one by one. So first of all, for call in advance guy, see, the call in arrears guy has not paid me the money yet. So first of all, pass the entry for call in advance guy. So ninth one, interest is payable. Right? So because interest is payable, it is a expense. So interest on call in advance account debited, because it's an expense. I am debiting the account because my expense is increasing. To what? To shareholder account, to whatever name he is, Mr. Iyer, to shareholders account. How much? How much has he paid me in advance? How much has he paid me in advance? How much has he paid me in advance? Rupees 25,000 on 10,000 shares, right? So rupees 25,000 into what is the interest rate that is supposed to be paid as per the Companies Act. When nothing is mentioned in the question, how much can I pay? 12%. I have to pay 12% into. Now, for how many months did I have the money in advance as per the question? For 3 months, because see, what was the time gap between first call and final call? What was the time gap between first call and final call? It was 3 months. See, the final call was made after 3 months from the first call, right? From the first call. So for 3 months. So 3 by 12. Go to the entry into 3 by 12. So 25,000 into 12% into 3 by 12. That will be rupees 750. So 750 rupees is payable to him. So let's pay it off on 10th entry. So now debit shareholders account, because he was a liability before. Now I am clearing off the liability by debiting it. So shareholders account debited to bank account. I am paying it through bank account. So bank account rupees 750. Okay. This was done regarding the calls in arrears. Now other guy, that idiot who did not pay me, after 2 months he paid me, right? So pass that entry now. So first of all, make the interest due. So whenever he pays me the interest for the calls in arrears, because he is paying me late, I am putting some interest on it. Because I am receiving the money late, right? He should not get the benefit of it. So I am charging interest at the rate of 10%. Remember 10%. So the entry will be interest is the income or expense. So in this case, in calls in arrears, will the interest be an income or expense? It will be an income. So credit the account. So to interest on calls in arrears account, and debit what? Debit shareholders account, because he is my debtor now. He is my debtor, or I can say that he is a asset to me. How much? How much was not received? Look at the working note again. How much was not received? 2,500 was receivable, right? It was not paid. So 2,500 into 10% into how many months? How many months? As per the question, who paid the amount due after 2 months along with interest. So 2 months due. So 2 by 12. So 2 by 12. Now what to do? How much is the interest? 2,500 into 10% into 2 by 12 equals to 41.67. 41.67. Clear? Yes. Now pass the entry when he pays me the money. Whenever he pays me the money, I will debit bank account. I will debit bank account. Yes. How much did I receive? 2,500. 2,500 plus 41.67. How much will that be? 2,500 41.67. Okay. So this much amount is received. Now, why did I receive this? So first of all, see, is this asset required to be kept in the books? This asset required? No, because I have received the money now. He is paying me after 2 months, right? He is paying after 2 months, right? So because of that, this account is no more required. So to shareholders account. To shareholders account. How much? How much is the interest received? 141.67. Then what about the remaining 2,500? How to clear this off? I cannot open share final call, first call account, nothing I can open because all the accounts are closed. See, if you remember, see, all these accounts are closed over here, right? See, final call account is already closed over here, 2.5 lakhs. But if you see, this account is still opened, right? See, calls in arrears account is still kept open. See, call in advance was opened over here, call in advance was opened over here and closed over here. Credit entry, debit entry, right? But for call in arrears, there is no closure entry passed. I have debited. Why? Because showing it as an asset. But he has paid me now. Once I received the money, will it be asset in my books? No, it won't be asset in my books. So clear it off. So how will I clear this entry? By crediting the entry. So two calls in arrears. So we are done with all the entries over here. Clear? Okay. So there are some more questions on these kind of examples, or let's say from topics. So please try it out, and if you have any notes, please put it in the Telegram channel. Okay. So going ahead. We have something called as premium. Now what is a premium? So now shares issued at premium. Usage of securities premium. So first of all, let's understand what is a premium. So what I do is my nominal value of each share is rupees 10 each. Okay. But I think that I should not receive only rupees 10. Rupees 10 is basic value. But I have worked so much for the company that I should not charge only rupees 10, but I should charge something extra from them. I should charge something extra from the people, from the potential shareholders. So what I do, I will change the value of the share to rupees 12 per share. 12 per share. See, this is not the change in nominal value. This is not the change in nominal value in my MOA or my AOA. So, sorry, my MOA. This is a charge extra than the nominal value. See, nominal value will remain the same, that is rupees 10. Nominal value will remain the same, that is rupees 10. But what will change? The total value collected from the shareholders will change. So because of that, rupees 2 whatever we have, rupees 2 whatever we have will be called as what? Will be called as premium. Will be called as premium. Now how will you pass the entry? I will tell you while passing the entry in the premium questions. Okay, but premium will also be a part of, will be a part of what? This will be called as securities premium, by the way. Okay, this premium will be the part of capital. So we have share capital. After share capital, we have something called as reserves and surplus. So securities premium will be a part of reserves and surplus. So all together this will be called as what? Shareholders fund. Shareholders fund. Clear? That's the format of schedule 3 in the first unit. Please go through it and then just have a look at this. Okay. So now, where can this securities premium be used? See, remember, whenever I am teaching this topic, This is linked to your other units. That is your unit on bonus, your unit on preference shares, your unit on debentures. Okay, so please listen to this carefully. So there are only five use cases. There are only five use cases of securities premium. You cannot use securities premium as you wish. You need to use only for these five purposes. So, sir, who told this purpose? These purposes are mentioned in the Companies Act, and we cannot avoid Companies Act. Clear? Okay. So, first is for the issue of fully paid bonus share capital. So, if a company wants to issue bonus shares, in that case, the company can use the money from securities premium. This will be taught clearly in the fourth unit, that is the bonus shares and the rate shares. Clear? Okay. Going ahead. For meeting any preliminary expenses incurred by the company. What are preliminary expenses? Preliminary. That means before the company's incorporation, before the company was incorporated, before that, if I incur some expenses related to the company for opening the company or incorporating the company, those expenses will be called as what? Preliminary expenses. Clear? Okay. Then we have for meeting the expenses of commission or discount incurred on concerning securities previously issued by the company. So, if there are any expenses that the company incurs for the commission or discount for issue of any of the securities of the company, be it debenture, be it preference shares, or be it equity share, those can be met through what? Through this securities premium. Then, for ensuring the availability of premium on redemption of redeemable debentures or preference shares capital of the company. So, we have separate chapters or separate units on redemption of preference shares, on redemption of debentures. So, unit number 5 and unit number 6. Okay. In these units, we will clearly see how the securities premium can be used in redemption of debentures and the preference shares capital. Clear? Okay. Then the last part, for funding a scheme of buyback of securities which is conducted in compliance with the provision of section 68 of the Companies Act. So, if I want to buy back my own securities, see what happens is generally company issues the securities. Okay, people will subscribe it. Okay, it will go on and on and on. At one point of time, the company feels that it has excess capital. It feels that whatever capital it has is excess. It is not required. It is simply a dead money which the company has, for which the company will go on paying dividends. Right? Company will go on paying dividends. So because of that, what company thinks is, we have surplus money. We have some dead cash in our hand which is not used by the company for any expansion or for any of the activities of the company. So what the directors will think that, let's pay off the money. How will they pay off? They will buy back the shares. Whatever shares are in the market, out of that some portion, let's say 10%, 20% of the portion of the shares will be bought back by the company at whatever the prevailing market rates are. Right? Even though the shares are issued for, let's say, rupees 100, the company can buy back the shares for, let's say, 250 rupees, sometimes 1000 rupees. It happens in some cases because the market value of the share has increased over so many years. See, it's not that the company will issue shares, tomorrow only it will buy back. It will buy back after 10 years, 20 years, 30 years, sometimes up to 50 years also. Right? Infosys, which had issued share back in 1980s, now they are being bought back. Why? Because company has surplus money, which it does not require for its day-to-day money. Business. See, always remember, in a business, if you have more money, it's not a good thing. If you're not using that money, that idle money, it will simply be there. It won't make kids over there, right? So because of that, I will pay off the money. Whatever extra money I have, I will pay it off, right? So for that buyback, if I have, I can use the money from the securities premium. Clear? Only for these 5 purposes, securities premium can be used. Clear? Okay. So now going to the questions. Okay, look at the question now. Illustration number 6. On 1st October 2022, Pioneer Equipment Limited received application for 2,50,000 equity shares for rupees 100 each. Okay, issued at a premium of 25% payable as so. See, the share value is rupees 100, and whenever the premium is given in percentages, that means you need to multiply it with the face value or the nominal value of the share. So that is 25%. That will be equals to how much? Rupees 25 is the premium charged on the shares. Why the premium is charged? Because the company feels that its share value is more than the nominal value. Whenever the company feels that its nominal value is more than its value is more than its nominal value, in that case company will charge a premium. So on application we have received how much? On application we have received 25, and on allotment 75 rupees. This is including premium. That means how much is actual allotment value? Rupees 75 minus 25. 25 rupees is the premium, right? Remember, computed over here. So how much is the value of actual allotment? Rupees 50. Okay, where will this be used? I will tell you. Wait. And the balance amount as and when required. Okay. So balance on shares will be required as and when required. So if you want to make the calls, you can make the calls, but I won't be passing the entry for the calls again. Okay. Whatever the entries we have passed before, the same entries goes on. I want to concentrate mainly on the premium part. How to pass the entry for the premium. Remember. Okay. The shares were allotted by the company on 20th of October and the allotment money was received duly on 31st of October. Okay. Record the journal entries in the books of the company to record the transaction in connection with the issue of shares. Okay. Let's start. So let's start the first entry. So is the date given to us? Yes. So on 1st October 2022, on 1st October 2022, the application money was received on 2.5 lakhs equity shares. Okay. The entry will be bank account debited to share application account. Share application account. How much? 2,50,000 shares into rupees 25. That will be 2,50,000 into 25 equals to 62.50 lakhs. 62 lakhs 50,000 is the value. Okay. After this, transfer the amount on the what date? On the date of allotment. When was the allotment done? On October 20th. So on 20th of October 2022, share application account debited. Application account debited to what? To share capital account, equity share capital account. How much? Again 62.50 lakhs. Okay. Now comes the important part. Okay, look at over here. Look at this over here. See, on allotment we have two bifurcations, right? I will just bifurcate this as so. In this, one portion of rupees 25 will go to what? To securities premium account, to securities premium, whereas remaining 50 rupees will go to share capital. Remember, see, always whatever securities premium you have, we should be shown as a separation from the share capital. You cannot mix up share capital and securities premium together. Remember this, clear? Okay, this will go to what? To my share capital. Okay, fine. So now pass the entry now. On what date? On the same date, that is 20/10/22. What is the entry? Share allotment account debited. Just a minute. Share allotment account debited to share capital account and to securities premium. Securities premium account. Now, why did I credit securities premium? See, share capital we know already why it is credited, but why did I credit securities premium account? So two things you can assume. Okay, you can take it to two ways. See, securities premium, as I told you people, is a part of reserves and surplus, right? Securities premium, whatever we have, is a part of reserves and surplus, and reserves and surplus belongs to what? To the shareholders or the share capital. Since I am receiving securities premium, that means the value of reserves is increasing, and whenever reserves increases, capital increases. Whenever capital increases, we will credit the entry. This is the first case. Then securities premium can be taken as a gain. Securities premium can be taken as a gain. Why? Because I am receiving more than what is supposed to be received, right? So because of that, it is a kind of an income or a gain, and whenever income or a gain increases, we will credit the account. So let's go with the first approach only, always. Okay, let's always go with the first approach. So please do not follow the second approach. Clear? Okay. Now pass the entry. For allotment, how much is supposed to be received? So here rupees 75. Rupees 75. Here rupees 50. Here rupees 25. So 2,50,000 into 75 equals to 187.5 lakhs. Then 50 equals to 125. 25 equals to 62.5, and we are done with the entry. Clear? Okay. Now, when was the allotment money received? So it was duly received. The allotment money was duly received on 31st of October. So on 31st of October 22, the entry will be what? Bank account debited debited. How much? Let's see. 2. Share allotment account. Whatever share allotment notional account was created, I will clear it off now. Share allotment account. Okay. Now the entry will be for 1 lakh, whatever it is, 187.5 lakhs, and over here again 187.5 lakhs. Okay. Yes. So the remaining amount, whatever is due, how much is due on the final call? How much is due on final call? 25 plus 75 will be equals to rupees 100. That means everything is received. No sir. Why? Because 100 rupees plus 25 was supposed to be received. That means minus 125 if I do, 25 rupees is supposed to be received on final call. So rupees 25 to be received on first and final call, or whatever the call you call it. Got it? Clear? Yes. So pass the entries, the simple entries, whatever you pass. Share final call account debited, 2 share capital account, and then again bank account debited, 2 share final call account. Done. That's it. No difference over there. Only difference will be in the allotment step, because they have clearly mentioned that, see, on the stage of application there won't be premium. The premium will either be on the allotment stage or the call stage. The first call, second call, final call, whatever it might be. So look at the question properly. Depending on the question, decide where the premium is being received. Wherever the premium is received, just give a bifurcation like this. This is the bifurcation they are expecting from you. This is the bifurcation. Should you see? Generally we pass only this much entry, right? Generally we pass the entry this much only. Now when the premium comes up in every stage, whatever it can be final call, first call, whatever it might be, just change the entry over here. That's it, done. Okay, just add this securities premium over here. And regarding discount, shares after the amendment in the Companies Act, shares can no more be issued at discount. Clear? So you will not receive any question where equity shares are issued at discount. It's a mandate as per, I think, section 53. But as per section 54, shares can be issued discount only to employees. That is the employee stock option. Clear? Okay. So we're done with this question.